The Federal Reserve is printing money again, but not in some distant future. It's happening right now, $40 billion every month. And on the last day of the year, they dumped $75 billion straight into JP Morgan. But here's the thing. Why isn't anyone talking about this? Everyone's distracted by headlines like SpaceX gearing up for a $1 trillion IPO. But the real story, the one that could make or break your investments, is happening behind the scenes. What does this mean for you? Well, by the end of this video, you'll know exactly why the Fed is printing all this money, how it ties into the massive IPO frenzy, and when the crash is coming. You won't want to miss this. So here's what you're not hearing. The Fed just made a massive move that's flying under the radar. While the media focuses on interest rates, the real shift is happening right now. The Fed has started something called reserve management purchases, a fancy term for printing money, $40 billion every single month. That's not some future prediction. That's happening as we speak. But why does this matter? Because this isn't just another policy decision. This is a sign of something bigger. Think about it. Why are the biggest companies in the world, SpaceX, OpenAI, getting ready to cash out with IPOs worth trillions of dollars? And why are they all timing it to go public at the same exact moment? Let's pause and think about that. This pattern has played out twice in the last 25 years, and we've seen the devastating consequences. So what does this tell us about the market today? More importantly, what does it mean for you? Stick around, because everything you think you know about the economy and the stock market might be about to flip. Let's get straight to the point. The Fed is printing money, but it's not for the reasons they're telling you. Sure, they'll say it's to manage reserves or help the banking system, but here's the truth. The real reason they're doing this? Banks are running low on cash. That's right. Bank reserves are at a 4-year low, and at the end of the year, the Fed had to step in and inject emergency funds. So when the Fed says they're just managing reserves, notice what they're not telling you. This isn't just a technical operation. It's a lifeline. But what does that mean for the average person? More money in the system doesn't just help banks. It pushes up asset prices, stocks, real estate, everything. In the short term, it feels like a win. But here's the part nobody's talking about. This is all happening because something's broken in the system. The banking system is showing serious cracks, and the Fed is scrambling to keep things afloat. And this isn't a temporary fix. It's a signal that something far bigger is coming. Now, here's where it gets intense. The situation isn't just a quick fix, it's escalating. Think about this. We've seen this exact pattern before. Back in 2000, the NASDAQ crashed by 78%. In 2021, 95% of IPO investors lost everything. This is the same playbook, only this time it's happening on a bigger scale. The Fed's money printing is like pouring gasoline on a fire. Sure, it might make the market look hot for a while. Stocks rally, people get excited, but that's exactly what happened before the bubble burst. And the worst part? The Fed is now doing what they swore they wouldn't, injecting cash back into the system just like they did before the last crash. But here's the thing. We're not talking about a few companies. This time, the biggest IPOs in history are coming all at once. SpaceX, OpenAI. These companies are preparing to cash out at the peak of the market, just like we saw in 2000 and 2021. It's a massive red flag. But don't get too comfortable, because the real danger is still ahead. When the music stops, and it always does, will you be ready? Let's dive deeper. The Fed isn't just printing money to prop up the banks. They're creating a perfect storm for the stock market. And here's where it gets even more disturbing. What we're seeing right now is a direct contradiction between what's being said and what's actually happening. The Fed tells you they're managing reserves, but the reality is that they're fueling a speculative frenzy. These IPOs, they're happening at the exact same time. Trillion-dollar valuations. Companies like SpaceX and OpenAI are gearing up to cash out when the market is at its hottest. And why? Because they know something you don't. They're getting out at the peak. They're selling to you, early investors, regular retail investors like you and me, before the crash hits. And here's the kicker. History shows they're usually right. Market timing is no coincidence. The insiders know that once they get their money out, it's game over. When these massive IPOs hit the market, they'll inflate valuations even more. But what happens when the bubble pops? The same thing that happened before. Billions lost, and the crash hits faster than you think. This time, it could be even worse. Now, let's stack up the pressure. First, we had the Fed printing money, $40 billion every month. Then, we have a wave of trillion-dollar IPOs flooding the market. But wait, There's more. Banks are in trouble. Their reserves are at record lows, and emergency lending from the Fed has hit all-time highs. But here's the thing. This isn't just a few isolated incidents. The cracks are starting to show in the entire system. When the market is riding high, people get greedy, IPOs are popping off, valuations are climbing, everything looks great, right? But as we saw in 2000 and 2021, this is when the biggest crashes happen. Investors are pouring money into tech stocks like there's no tomorrow, thinking they're getting in early. But what happens when the insiders cash out and the market starts to correct? The risk is building fast, and this is just the beginning. What happens if this continues? The next crash will be bigger, faster, and more brutal than anyone is prepared for. Now let's shift gears for a moment. This isn't just about numbers or charts. This is about real people like you. The average person isn't thinking about what happens when these bubbles burst, but the fallout is felt everywhere. What if you've been saving for years, thinking the market would always go up? Or what if you're just starting to invest, caught up in the excitement of these huge IPOs? When the market crashes, it's not just the rich who lose. It's people like you, your neighbors, your family, people who put their savings into stocks, thinking they were buying into something solid. But when the crash hits, it's ordinary people who take the hardest hit. If this feels familiar, if you've seen this before or felt it in your own life, drop a comment and let me know. The consequences of this bubble bursting won't be limited to Wall Street. It'll spread everywhere, from your 401k to your local economy. Are you ready for it? Here's the uncomfortable truth. This mess isn't just a few bad decisions. It's how the entire system works. And if you want to understand why this keeps happening, you need to look at the bigger picture. The Fed is printing money to prop up the system. But this is about far more than just stabilizing the economy. It's about power, leverage, and incentives. When the Fed pumps more money into the system, it pushes asset prices up. Stocks, real estate, everything gets inflated. But here's the catch. This isn't a sustainable fix. Banks and companies thrive on this volatility, using it to make huge profits, while ordinary people like you are left holding the bag. The whole thing operates on fear. Fear of crashes, fear of losing control, fear of missing out. And it's this fear that keeps the system running, because it forces you to invest, to play the game. But behind the scenes, the people pulling the strings aren't worried about the crash. They're just waiting for it to hit so they can clean up on the other side. This system is built to fail, and every time it does, the same people come out on top. The game isn't fair. It's rigged. So where does this leave us? There are two paths ahead, neither of them pretty, but both loaded with opportunity. First, we could see the market rally hard, more money printing, more IPOs, valuations going through the roof. If that happens, we could see the stock market climb even higher before everything comes crashing down. It's the calm before the storm. Things could look great for the next year, even two. But don't let it fool you. The second path is the one I'm worried about. The crash could come sooner than anyone expects. Once the Fed stops printing money, once those IPOs hit and insiders cash out, the bubble will pop and the market will sink faster than you think. So what happens next? It's hard to say, but the momentum is building. And once the tipping point is reached, there's no going back. The question is, will you be positioned to profit when the dust settles, or will you get caught in the wreckage? Here's the big takeaway. This time, it's not different. Every cycle, we see the same pattern. The market surges, the insiders cash out, and the crash follows. But here's the part that matters. You don't have to panic. If you can stay calm, stick to a solid strategy, and resist the hype, you'll be in the best position when the dust settles. The real opportunity isn't in jumping on the next big IPO or chasing the hype. It's about knowing when to pull back, when to prepare, and when to act. The market will crash. It always does. But if you're smart, it'll be the perfect time to buy the right companies at the right price. So don't get caught up in the noise. Make sure you're following for more insights like this, because the next wave of opportunities is already forming. Stay ahead of the game.